Welcome to The Missing Link, a podcast where crypto and insurance come together. I'm Dan Roberts, and my co-host is Danielle Wall-Elliott. Whether you're in crypto, traditional finance, or in need of a new podcast, The Missing Link will help you explore the vital role that insurance plays in crypto and how blockchain will disrupt insurance. Join us on our journey to find the missing link. Okay, hi everyone. Today on the episode of The Missing Link, we have Kevin de Patoul, CEO and co-founder of Keyrock, a really exciting market maker in the space. He rated himself a little higher on the crypto side than the insurance side, so certainly another expert in crypto. He spoke about how it was raising $72 million in a very turbulent market. We particularly enjoyed our conversation around tokenizing illiquid assets. He focused on carbon credits there. And of course, he gives us his thoughts on the missing link, of which he gave two, and we allowed just this once. It was a great discussion, and we hope you enjoy.
Enjoy episode number 2.
All right. Hi, everyone. And hi to Kevin. Kevin, thanks so much for joining us today. How are things?
Well, good. Very good. Thank you for having me.
All good. Yeah. No, you're very welcome. For our listeners, Kevin is the CEO of Keyrock. Keyrock, as well as being an investor in Nayms, is I would say up and coming, but I feel like you guys have arrived at this point, particularly given your recent announcement, which we'll get to. Really positive activity for the space. It's great to see the progress there. So congrats. I thought, the first question could really be, what does a current day on this Friday look like for you as a post-Series B founder?
It's busy, right? But it's busy in a good sense. I think that 2022 was busy but hectic, right? Hopefully 2023 now is shaping up to be I wouldn't say stable, right? Nothing is ever stable in crypto, and especially not when you're growing fast as a company. So I guess it's busy but exciting. That's how I would sum it up. And clearly I still consider us as up and coming. I think that there's when you look at the level of ambition that we have, but that you have most likely as well for this market, I think that the entire industry is still very much up and coming compared to where it aims to be. So yeah, we had some good news last year for sure. That is kind of but it's just a mean to an end, right? And the end is still very, very far away. So we still have a lot of things to build to be the way we want to be as a market maker and a liquidity provider in the space. So still very much up and coming, which means that hopefully there's going to be many more days that are busy and exciting.
Nice.
Great. Well, thanks for making time for us on your Friday here. And, we like to, the missing link for us is a journey to discuss with leaders in the crypto space. Not only, obviously our take is where crypto and insurance meet, but really we want to know what is the missing link and what does the crypto space need. But to start off, we want to ask each of our guests to rate themselves, on a 1 to 10 scale on their crypto knowledge, and then a 1 to 10 scale on their insurance knowledge. So what would you rate yourself?
You had as the first guest someone very, very knowledgeable on crypto already, right? So what did they say actually? Because I didn't check that answer before.
No, it's good. Stephen had a great way to assess it.
No comparing.
It's like, if Vitalik is a 10, what am I? And I was like, oh man, I should have used that scale for myself. Yeah. We rated ourselves on the intro episode as well.
Yeah. So if you take that, it's, I don't know, Vitalik a 10, and my grandmother a 1 in terms of crypto, then I'm probably put myself at 7. That sounds probably about right. So I'd say 6, 7 on insurance. My grandmother might actually know more than me, so I might be more of 2 or 3 to be honest. That's one industry that I still need to learn a lot on. I guess that what I do know about it is through you guys. So there's still some education to be done on that front.
Okay.
Amazing. We should get your grandma on the podcast. On the insurance side. Maybe she has some insights. Amazing. So what was that? That was a 7 and a 3 for crypto and then insurance. Excellent. Well, yeah, would love to dive into this positive news. I feel like when we first connected, which was a while ago now, you were telling the story of how Keyrock began, which I believe was as a trading algorithm. Is that correct?
Yeah, so we started indeed. So Keyrock, we're a market maker, liquidity provider. So at the heart of what we do is algorithmic trading, right? So I founded the company with Juan David and Jeremy 5 years ago now. So it was end of 2017. And for us, the starting point was really to understand why are digital assets, and actually back then why just crypto, why is it popular? When we started to talk a lot with Juan and Jeremy, it was in the course of 2017. ICOs were just exploding. It was okay, why is this so popular? There had to be something else than just the potential to do 100x on a stupid coin, right? There had to be something there, and we figured that something was the potential liquidity that you have when you tokenize an asset. So when you transform an asset into a form that is fully digital, you have something that is potentially a lot more liquid. But at the same time, we saw that on the market, liquidity is very, as it's decentralized, or part of it is decentralized, you have something that is very fragmented. And so liquidity is actually an issue. So we saw liquidity as both kind of a very big, the main added value of tokenizing asset, but a very big challenge on the market is really putting the two together that led us to create Keyrock. So with the vision to empower tokenized economies and to build a system that would allow us to provide liquidity at a large scale to digital assets. So that's kind of how we got started. And the first week into that is indeed a trading algo to start bridging between exchanges, start bridging between exchanges and OTC desks and so on, start really kind of pulling the liquidity and being, I'm not going to say missing link, but one of the intro link in that market. So that's kind of how we got started five years ago. I think that when we met was we had just raised first round around 4.5 million a couple years back, maybe 3 years now, and indeed, so that grew a bit larger last year with our Series B to allow us to continue to grow even faster.
For sure, yeah. So for our listeners, the Series B, I believe, was a $72 million round with Six, Ripple, Middle Game, who I know have been with you in a previous round as well. So some really top investors there. I think what is probably pretty appealing as investors about a market maker is that a hot market, quiet market, side down, up, market makers are still totally valid. Obviously you benefit from liquidity in the space, but that's always required, those players. So what was that process like of putting a big round together? I imagine it started before lots of the negative news and finished after lots of the negative news of last year. How was that process from start to finish?
Yeah, more or less. So we started around May. We started around May, June. I think the discussion. I think more May. But I think that the market was just horrendous the entire year. But there's basically two main things that allow us to put this round together. One, if you look at our investors, so you have these 6 fintech ventures and Middle Game. They were co-leading our previous round, so they know us very well. And then you have Ripple that led this round. They were not an investor before, but they've been client of ours for 3.5 years. So again, they know us very well. They know the service that we provide. They know how our tech works and so on and so forth. So having those investors that know you very well, you kind of take away a lot of the asymmetry of information, so to speak, and therefore you really decrease the impact of the overall market conditions. So because they know exactly who you are, it's not just a game of bluffing. So that's one. The second thing that allows us to put this together is also the track record that we have. I mean, we launched the company in 2017, and we've been growing every year. And so that's established also a bit. You add that with the fact that our investors know us very well. Put those together allow us to raise this round. And as you mentioned, a market maker, a liquidity provider is something that is needed in all market conditions. So really kind of the investment thesis here is, one, do you believe that digital assets are here to stay? And I mean, I guess I'm not going to have a lot of controversy around that in this, right? But there's a very strong belief on that. Do you believe that those assets are going to be traded? And of course, that's why they tokenize in the first place, to make them easier to trade. So if you put those two things together, there's a very strong case for market makers and liquidity providers, because that's exactly what we're here for, to make it easier to get in and out of position and to make markets more liquid. So, basically those things allowed us to get that raise together last year. And so we started in May. It closed in October, so just before the latest real blow up of the year. And yeah, so it was a good timing, definitely.
For sure. Well, yeah, no, congratulations there again. I guess the final one on the round was really, putting a round together of that kind of scale. It's very interesting to hear that, well, to existing investors, but also a user of your platform. It's obviously a very positive way of doing it. I think that asymmetry of information is so key. Nayms went through our own funding round in the height of the bull market in 2021, and you do realize perhaps how much corner cutting goes on with investors if they're trying to get into deals and get into particular projects, and you start to see those companies and those investors wash away when things go down. So it's great to have that relationship with your investors. What sort of resources did it take on from the team? Is it a solo Kevin Reyes with partners and investors? Is it a big team effort? How does that go?
No, I mean it's always a team effort, right? But I was always the counterpart in the discussions with all investors. That's something that I do. But then, of course, to make sure that I don't speak nonsense during those discussions, there's a lot of team efforts behind it with basically all the teams. And then as the discussions kind of progress, there's also due diligence that actually was done in our office with discussion with other team members. So definitely it's very much of a team effort. Yes.
Awesome. Well, we get to work with a lot of that team and thoroughly enjoying it. So yeah, congrats again.
Thanks a lot.
Yeah, I saw Juan David at a conference, and he was saying just tokenization in general, and then he's saying tokenization of the capital for insurance markets, and I'm like, yes, that's us. So excited, getting hyped. Hearing him. So we've been enjoying working with you guys. My question for you is, you're a market maker, you get to engage with such a variety of different crypto projects and businesses in our ecosystem. What is your selection criteria of who you actually work with and who you accept on the market making strategies?
So the first one is actually very, very. You would think it's a rather low bar to clear, but actually it has actually worked as a filter. Is who is in this to build things right, and so basically who's willing to do with us, a full KYC process, a proper onboarding, who is regulated in what jurisdiction, and how why are they here? What is their target with what they're building, and how long term are they aiming? So that's one. That's definitely one big criteria that we had on our sales deck since 2017, saying that we don't do pumps and dumps, we don't do wash trading, we don't trade against ourselves, we don't take volume targets, blah, blah, all this stuff. You say, yeah, it sounds about reasonable, but it was slide one in our deck to make sure that we were only working with actors that are aligned to that vision of the market. So that's the first. After that, of course, it's we want to make sure that we work with projects that are ambitious, that have an ambitious long-term vision for their project in and of itself, and therefore for their market as a enabler of that. Other than that, we don't have as a company at least for the support that we provide on the market making, we don't have a specific kind of verticals that we only work with, or others that we never work with. Our purpose for us as a sales vision is to empower tokenized economies, and that can take very different shape or form, as long as we have projects that are aligned in the way to do things, and kind of the doing things right, so to speak, and that I have a very high ambition in doing so. For us, it's projects that we want to be working with.
And have you found any trends recently? Has anything changed since the big blowups of last year and the trends of the projects that you're working with?
Yeah, definitely. It's a tougher market, right? Lots of the projects, especially the ones that are on the smaller side, they struggle a bit more. So with price falling, that means for some of them the treasury has been melting as well. It's harder to raise funds. It's harder to do everything. So that's definitely something that we see, that the market is a bit more challenging, very clearly.
Are you seeing that, everyone says, well, people build in the bear markets? Do you agree with that? Do you feel that that's happening right now?
Yeah, I agree, but that's something that you actually realize after it, right? It's not. Right. It's usually you say that at the beginning of the bear market number 2, or in this case number X, because you've seen the result of the previous ones, right? So I think that's, of course, there's less place for fuss and nonsense, because times are tougher, and so people focus more on their project, their tech, their business, which is why it's something that basically bears fruit afterwards, which definitely ends up being a net positive for the industry.
Yeah, for sure.
I feel like the sentiment on people build in a bear market is really those that are building in a bear market were building in a bull market as well, and always have been. And it's just in the bull market you get all of the the frantic activity from lots of new players that aren't around. So you're just left being able to view the people who are building in these sort of more bearish times.
Yeah, I agree.
It's less distractions.
Everybody else is gone.
Yeah.
And who would have thought a bear market would be, Bitcoin at 25? Okay. I remember big parties going on when it hit 10K. So progress is being made for sure.
That's clear, yes.
One of our hypotheses is that the next wave of crypto will be centered around the tokenization of illiquid assets. Some people say the tokenization of real world assets. Do you agree? And what is, Keyrock's take?
Yeah, I definitely agree. I mean, it's I'm convinced that down the line, every single asset will be digital. Not because, I don't want to get too political, right? And that's not really driven. It's not only driven by a belief around decentralization and so on, but just simply because it's a better system. If you have an asset that is digital, it's simply easier to trade. It's easier to clear and settle. It's faster. It's cheaper. So no matter where you stand on the political spectrum and why you're behind this, if you look purely at the numbers, it's a better way to represent value. So starting from that, I think that down the line, all assets will be digital, and that's really something that we have believed very, very strongly. The reason why we built this company with kind of scale in mind, I think that thousands and thousands of assets would be fully digital. So what is interesting is to see that more and more people tend to agree, and guys like Larry Fink, they do manage a bit of money at BlackRock, and they see tokenization as the very big next thing. So it just makes economical sense, basically. So it's definitely something that I agree with, that down the line all value would be represented by a token, and it will be fully digital.
And you said it makes economic sense. I think that's kind of my argument as well, is just in crypto, we've had these yield farming. We've had some, in my mind, little fakey yields and fake returns. I think that's part of the Terra Luna crash. There's these yields that don't seem to actually represent anything. But if we can tokenize real world assets, we get real world yields too.
Yeah. And the thing is, it's just, the number of use cases is just infinite. Like why would you tokenize a stock? It's like, can I buy half a stock from you right now? I can't. If it's tokenized, I can. So yeah, it's just better. Like, why do I use stable coins all the time? It's not because I have an innate distrust in the European Central Bank, right? It just works better. It's just that. So I think the number of such examples is just infinite to push the case that it makes sense to digitize value the same way we digitize information, and which came with a host of innovation that is absolutely infinite. It would be the same thing for value.
Have you seen any, again, kind of this question of trends. Have you seen any trends of real world assets being tokenized recently?
The thing, but it's interesting because I'm currently I look a lot into carbon markets. I think it's very interesting for multiple reasons, and it's not a trend that is specifically happening right now. There was lots of examples of happening last year, but it's particularly interesting, I think, on this market, because it shows as well that tokenization is not the panacea either. I mean, if you tokenize something that has no value, it still has no value once it's tokenized.
Yeah.
It's to say very bluntly, it's shit in, shit out, right? The fact that it's a token doesn't make it amazing. And in the case of the carbon market, I think it's very interesting because a very big challenge of that market is the sourcing of the actual carbon credits. Where do they come from? And we see that issue of sourcing is not resolved at all by simple tokenization. There's a need for a more structural solution. It is a market that I follow very, very closely, looking at what new kind of innovations are being built. And there's a lot of things that are addressing. Lots of projects are addressing this issue of sourcing, and I believe that it's the perfect example of a market that would greatly benefit down the line from being fully digital, because you have on the demand side, there is like a tidal wave of demand coming up, I think, for all the obvious reasons around the necessary climate actions. So there's a massive demand coming. So you need something that is efficient and cheap and fast. And on the supply side, you have a market, an asset that is very fragmented, that lacks transparency, and that is currently very hard to access. So if you put all these things together, I think that having a fully digital carbon market is something that is tremendously not only interesting, but can have a very positive net impact, which is definitely something that makes it even more exciting.
Yeah, that's great.
Thank you.
Yeah, I feel like what's cool is that the trends, let's say on every different verticals, they're not necessarily driven by the technical implementation, because it's become open source and very easy to tokenize these things. It's being driven by the adoption, and that's great. So there's no bottleneck to adoption. It doesn't mean that everything that gets tokenized gets adopted. But yeah, the ease that you can do this means that there's just a lot of innovation going on in these different spaces, which I think is very exciting. And that's to our envy. We focus on insurance only, whereas you guys get to look at all these different spaces, which is great. So, we've had discussions about using our infrastructure for different verticals, and we've decided to stay pretty focused for now. But yeah, we may get there. And I guess on the topic of tokenizing liquid assets, tokenizing real world assets, obviously in our area of insurance, that's what we're doing. And maybe just to explain for some of our listeners as well, we have our own network token called Nayms to come this year, and Keyrock will be a market maker there. But we also tokenize the insurance pools on our network. So we have these segregated accounts. They run different lines of business, and they have their own individual token. We call them participation tokens. And so, I would love to ask you, Kevin, around if you're looking at a new market making opportunity, a new token, a new liquid asset to get into. Traditionally in the insurance space, that process of trading insurance exposure has been riddled with an extensive legal process, shareholder resolutions, large broker fees, very, very manual offline kind of characteristics. And, maybe for certain reasons, as in, the returns from insurance are slow and steady. And you really don't see a huge amount of change in the risk profile day to day. It's not like, some news comes out about a stock and people want to be moving in and out. I guess the question to you is, I believe that Keyrock looks at all sorts of different areas, and the liquid asset piece is, of interest to you. How do you assess those new kinds of areas? Perhaps looking at this insurance example, what would be some of the questions that you would ask, the research that you would do around this area?
Well, I think that what's interesting, what you described, sounds a lot like trading claims to funds stuck on FTX, right? Where you're going to have the total loss is very much unknown, which you have lots of players actually doing. There's a market around that. So I mean, the thing is that for us to be trading, like we we strive to be market neutral in our activities, right? So if we would start trading those assets, there needs to be a very, very strong understanding of the fungibility of the risk that we take on our book, and our ability to hedge it. And when there's kind of a residual risk that would remain, have a very, very deep understanding of the market to know what would be driving it, what were another, so that we can manage that risk appropriately. So I think these are really kind of the main things that would be necessary for us to be active there. Of course, once we have decided that there is an actual opportunity, right? Like that's in terms of trading volume and kind of size of the market and need for liquidity compared to the status quo, that there is real value that we can add and actually bring something to the market. Once we agree on that, then it's about, okay, are we actually able to do it? And then come the questions that I just mentioned. So for things like this, it would definitely be a need for us to have a very strong understanding of what we are trading and how we can manage the risk that we take, and the potentially residual risk that can remain on our book for longer, how we can manage it as efficiently as possible. So I need to get my 3 in insurance all the way up to at least 7, I guess.
Exactly. Yeah. Well, we'll help you get there. Yeah. You want to make sure that, you don't end up holding some massive, catastrophe exposure for 6 months because there's no buyers. And so it's interesting to, figure out what that might look like. I just think it's a great, a great use case of tokenization that allows this, very tradable element to get in the hands of market makers like Keyrock. So we're excited to see what comes out of that.
And just in the hands of more people in general. I think that, a lot of these opportunities are so siloed to traditional finance. If you have enough money connections, regulation behind you, protecting you, that you can actually do these things. That's what inspires me about what we're doing.
A market functions when you have the least kind of resistance to capital allocation. And when you have something that is, as you mentioned, Dan, something that is very kind of legally intensive and complicated and slow and very much kind of protected, but not really protected, but just kind of how like hidden from view. There's a lot less ability to deploy capital there, potentially for people that will have a profile of risk just suited to actually take that on, right? And so you have something that is subpar in terms of efficiency, and you end up with the entire market losing. So what you guys are doing in removing those hurdles is, of course, tremendously valuable. And once you have something that is, easily investable and easily exchangeable, so that the market can actually allocate, capital on one side or the other of the risk, that's where you have a need for players like us to be the link and make sure that, in between the time that a buyer and a seller, come with the same price in mind, we are there in the middle to kind of, bear that risk and hopefully do that, efficiently if we know the market well enough, which we aim to.
Yeah, right. I feel like that's a real key piece. Is it's almost like new technology and how legal, I say that a lot, kind of how the legal and regulatory pieces fit into that, because ultimately those pieces, if they inhibit the technology's utility, you're not going to get very far. But once you figure that out, it's how the technology releases new kinds of behavior. And so insurance is all about capacity, increasing the capacity. If there's ample capacity for a particular type of risk, then that's, good for everyone. And apart from, the returns from the capital providers, perhaps, but it, makes for an efficient market. That's really we've arrived moment, I think, for Keyrock and Nayms as a partnership, perhaps, is seeing the technology that Keyrock does, or particularly that Nayms does, enabling an opportunity for Keyrock in the insurance industry. I think that could be such a wild new status quo for insurance. Certainly excited about all of that.
All right, last question. This is the moment in the movie when you drop the title. So, reflecting on the crypto ecosystem as a whole, what do you think is the missing link?
I think I see actually 2. So I don't know if it.
We'll allow it. Yeah.
The title. I think the first one for me is still clarity, and of course, like for me, honestly, from all businesses, that means regulatory clarity. It's something that, and I mean, the recent events in the US kind of, I guess, illustrate that very well with the issue like potential banning of staking, right? I mean, it's very tough to build something ambitious and long term when the rules change all the time, and where there's the rules are simply not there, and then all of a sudden they come and they were not expected. So that lack of clarity is, I think, still very much of a missing link. And then the second, but what is interesting that I know it's currently being forged, so to speak, by all the projects working on them, is the use. That, it's there's lots of things on crypto that are very cool to use, but that at the end of the day are very much geared to a very niche portion of the population that just find it fun to interact with and do it purely for the sake of interacting with it. But then, what is still the output of all those projects coming to maturity, bringing a real kind of massive use that is a lot more general than just geared to the usual crypto public. Like what? I don't think it's going to be one. I don't think it's going to be one killer app, but it's really kind of, all the projects that have been building for the last 3, 4, 5 years are kind of, slowly but surely getting there, and where at the end people don't care that it's crypto or not. It's just that this adds value to my day-to-day life, and that's what matters.
Do you think our grandmothers will find those use cases and, in their lifetimes, have some real world use case for crypto?
Yeah. I think so. Yeah, I think so. I mean, we're definitely. I don't think it's decades away. I think quite the contrary. And every cycle brings new ones. I mean, why was the market so depressing when it fell? In 2018 is because basically there was nothing but air beneath it. Like there was nothing. It was just ICO promises, blah blah blah, and then nothing. But the reality is that now the thing also grew way too big. Last year it blew, but when it actually fell back on something that was there is usage in all those protocols. There is, that value locked on chain. All of this exists and is being interacted because it does provide some value still now to a rather, restricted spectrum of individuals. But I think that it's still a lot more than 3 years ago. Yeah. And so I do think that when you look down the line in 3 years, it's just going to be even much bigger.
I can't wait for that. Each time, each bull market, every time, we get a little closer to our goals, and it's what gets me up in the morning and makes me want to continue working in this space. So.
No, I agree. It's definitely exciting.
Well, Kevin, thank you so much for joining us. I feel like unless blockchain can come up with a use for watching more Pointless on the TV, my grandma won't be participating in blockchain, but hopefully lots of other people's grandparents. It's been great to have you on. Thank you so much for your time and your busy schedule. Congrats again to the progress that Keyrock's been making. Very excited to be working with you and seeing how we get on this year.
Likewise, thank you very much for having me. It was a pleasure to chat, and definitely look forward to 2023 and all the collaboration between Nayms and Keyrock that year will bring.
Perfect.
Thank you.
We're one step closer to finding the missing link. If you enjoy our show, please rate and review us wherever you get your podcast, and be sure to come back next month. Until then, we are the missing link.